Once upon a time, people spent years learning technical analysis in order to trade. Today, though, there are dozens of AI tools that can trade for you and earn you some solid passive income. So today, we're diving into AI trading assistants, including how they're different from other AIs, some benefits and risks to keep in mind, and what comes next for this promising niche. My name is Guy, and if you don't want to be left behind the curve, this is one video you cannot afford to miss. First up though, I'm not a financial advisor and nothing in this video is financial advice. This is educational content meant to inform you about AI tools for crypto trading. If that sounds good, hit that like button and let's get into it. Okay, let's begin by defining the difference between regular trading bots and AI trading assistants. A normal trading bot is a bit like a vending machine. You punch in a set of rules, price bands, time intervals, order sizes, etc., and the bot trades exactly as instructed. You set the logic and the trading bot operates within those exact parameters. Now, these have been around since long before AI trading hype hit your algorithm. On the other hand, though, AI trading assistants, often called AI agents, take things to another level. Instead of coding your strategy into a rigid template, you simply describe your goal in plain English. The agent then interprets your intent and helps you, whether that's with market research or executing a trading strategy you just explained. In other words, these AI assistants can help you formulate an investment plan or trading strategy and only execute an action when it's appropriate. Put yet another way, AI assistants follow a path of see, plan, act, in comparison to the simple if X then do Y associated with trading bots. However, this does not make AI trading assistants all-knowing oracles, far from it. But it does bridge the gap between research and execution in a way that feels more human. They can also help you figure out how to do certain things, whether that's bridging to some obscure niche chain or figuring out the best way to sell a low liquidity token. They'll compare tactics, summarize trade-offs, and outline risk in a couple of sentences so that you can decide whether to proceed or not. Now, although the two are technically different, there is some overlap between regular bots and AI agents. Generally speaking, both bots and AI assistants can help you execute trades and trading strategies. However, when it comes to active trading, the clearest point where the two split is when there's market volatility. A range bot that worked in a sideways market might get punished by the market when volatility hits. In contrast, an AI assistant that's paying attention to the regime shift can say, hey, your grid idea is fighting a trend. Do you want to switch to a momentum strategy instead? Arguably, an AI agent's main value is in pivots like that. And just to be clear, AI assistant doesn't automatically mean fully autonomous. Most AI assistants keep you, the human, involved in each step by design. This could be something like a list of steps that you must review and confirm before your agent can proceed. So, you still set the boundaries and you still approve what gets sent to the order books. After all, you don't want your AI assistant risking your whole account balance without explicit approval. You want to remain firmly in the driver's seat while the software helps make things run smoother. So, AI agents are a significant step above most trading bots, at least in terms of their capabilities. And the trend is pretty clear across the industry. Chat-first AI assistance is becoming the norm, and these tools are being used by more and more traders. So, we've covered the basics of AI agents, but where can you actually start using one? Well, a great option is GetAgent, an AI agent built directly into the BitGet exchange. GetAgent lives inside the BitGet app and behaves like a chatty copilot. You type what you want to do, it provides an answer or proposes a plan, and, if you agree, it can line up a task or trade so that you can approve it. If you want to try it out for yourself, hit the BitGet link in the description below. And that link grants you a GetAgent Plus trial, giving you access to GetAgent's advanced features and allowing you to ask up to 10 tailored questions per day. On top of that, you'll also get a deposit bonus worth up to 50k USDT. Once you've signed up for BitGet, accessing GetAgent is simple. You can find it in the More Services menu, but you'll also see a banner for GetAgent in the Assets tab, Spot pages, Futures pages, and so on. So it's neatly integrated into the flows you're already using. And once you open the chat, it's plain English from there. So first, let's look at a clean example of spot trading. If you ask GetAgent to help me buy 1,000 USDT worth of BGB, the agent drafts an order card with the size and pair pre-filled, shows you the preview, and waits for your approval. You're still in control of the final trigger, allowing you to read the summary, check things are in order, and then tap Confirm or edit the details. Now, what if you want to trade something a bit more exotic, though? Let's say you want to buy a token via BitGet's on-chain routes, that is, something that isn't listed on BitGet's spot order books. You can just tell the agent, help me buy 1,000 USDT worth of Borg. It then builds a route aimed at the best available price and returns an on-chain order preview with the key details. When you approve, it trades on-chain on your behalf, then directs you to receipts for your trade. But GetAgent can help you beyond speeding up standard tasks. You can even use it for your own market research and strategy development. In the interface, you can type something like comprehensive analysis of BTC, and GetAgent will put together an analysis of BTC's recent price action. From there, you can push the agent for as much information as you wish, just like it's your own research assistant. The applications go much beyond these examples, though. GetAgent can combine its research capabilities within the context of your specific portfolio and build a plan that makes sense as your portfolio and the markets develop. That dynamic practical assistance is the key difference from simple trading bots. Just keep in mind here that you're still the one in control, and AI agents can make suboptimal suggestions from time to time. So it's still up to you to do your own research and double-check the output. You can think of GetAgent's output as a first draft, and you're the one who makes the final edit and decision on any given idea. So, if you want to give it a whirl, check out that link down in the description. Start any AI-driven trading strategy with small size, double-check every preview, and stick with spot markets if you're still getting your bearings. The main focus should be enhanced efficiency. Use the agent to cut the busy work and see how much time you save. So, AI agents can clearly be very helpful, but like anything else, there are both pros and cons to consider. So let's first have a look at 5 big pros to trading crypto with AI agents. First, just like crypto, AI agents never sleep. When a market runs 24/7, the edge often goes to whoever can scan and act the quickest. That's where AI can really help, and it lets you cover more markets, pairs, and more shifts than your human brain can juggle at 2 a.m. on a Monday. The second massive win is time saving. Instead of doom-scrolling 10 tabs to figure out why a token just dumped, you can ask an assistant and get a neat summary. It could take you hours to do all the research and analysis an AI agent can do in a matter of seconds. All you have to do is ask for help. And to save yet more time, some assistants aren't even waiting for you to ask anymore. They're shifting towards proactive, personalized updates that can help maintain your market edge. If your morning routine starts with a scroll anyway, having an AI deliver you a mini brief is a massive potential time saver. The third advantage AI agents give you is that they can keep trading emotions in check. Most of us are terrific at inventing reasons to ignore our plan. Forcing a trade with a bad entry, revenge trading, FOMOing, and/or YOLOing. Using an AI agent, though, will help push you towards rules and away from emotions to perform better over time, precisely because they mute emotion-inducing market noise. If an AI assistant can translate your trade idea into a checklist and keep tapping your shoulder when you drift off plan, that can be tremendously valuable. Having some structure to your trading helps you avoid bad impulses in markets that love to mess with your head. The fourth major pro to using AI agents is simple: improved trading execution. Whether it's a quick transaction on a major or routing an on-chain swap for something more niche, software can set up and fire faster than you can manually. In a 24/7 market, that speed can help a lot, and automation exists exactly for this reason. And the fifth pro we'll mention here is closely related to the fourth: reducing human error. Manual trading often involves rushed decisions, mistyped orders, or simply missing opportunities due to fatigue or distraction. In a fast-moving market like crypto, even small mistakes can result in significant losses or painful missed opportunities. By contrast, AI agents are machines that can execute faster and more consistently than manual clicking, which gives you much better consistency in turn. By eliminating slip-ups and enforcing discipline, AI agents can help you reduce the frequency of any costly blunders. Now, the list here goes on, but those are 5 of the strongest arguments for using AI agents in your crypto trading. But just because there are all these great advantages, it doesn't mean that it's all sunshine and rainbows. There are certainly risks to using AI Assistant, and here are 5 to keep in mind. The first risk is one we're all likely familiar with: AI error. While AI can help you avoid making errors typical of a human, AI can also make mistakes unique to AI. Sometimes, agents will speak with total confidence even when they're clearly wrong, whether that's due to stale data or other model limitations. That's why, as we mentioned, it's important to do the final checks on any AI suggestion before proceeding. The second risk is idea crowding. This is becoming clearer as the use of AI becomes more widespread. Even separate, unrelated AI agents will often come up with similar strategies. When lots of people chase the same idea, you get reflexive trades that eat the edge and sometimes become straight-up exit liquidity. Copy trading culture doesn't help here either. But the thing to remember here is this: if your strategy only works as long as you're close to the front of the line, it's more a game of chicken than it is a strategy. Replay what I just said and remember it. Now, the third risk is closely related to the second: over-reliance on AI dulling your trading mind. In crypto, it's likely that your biggest, most profitable trades will be those gems that run hard. These are the reflexive trades where you sit on your hands and let crypto do that thing where it trends up and melts faces over weeks or months. AI agents, however, are likely not going to tell you to sit on your hands. They're much more conditioned to prioritize profit-taking and risk aversion. Now, these are not bad things, far from it, but humans are much better at identifying great long-term holds or new trends, especially in crypto, where markets can move based on inputs AI hasn't fully grasped yet. So don't be afraid to trust the instincts you've developed over years of practical experience. AI doesn't have an edge on humans there. Well, at least for now. Anyways, the fourth downside to using AI agents: overcomplicating crypto trading. Yes, we did mention that AI lets you spin up complex trade structures much faster, but that's only good right up until it isn't. For example, an AI agent may lead you to implement something like an advanced futures trading strategy involving leverage, if you let it. Tacking on 10x leverage means small errors can get amplified into spectacular liquidations if you're not careful. And just because you're using AI tools doesn't mean you're invincible. AI assistants can help you execute your trading much faster, but it can also help you liquidate yourself much faster if you don't fully understand what you're actually doing. And finally, we have technical and security risks. Outages or coding bugs can disrupt an AI agent's execution, which can either result in you losing out on a good trade or possibly amplifying trading losses. Deeper security risks come with more advanced AI tools that connect to exchanges through third-party APIs, which essentially act as the bridge for executing trades. But this risk isn't unique to AI. 3Commas, a crypto trading service, gave traders a harsh lesson here when its API keys surfaced online and users reported unauthorized trades that drained accounts. Now, we're not mentioning these risks in order to discourage you from using AI tools. They're just a reminder that you have to be careful when using this technology, as you should be with anything related to trading. So, now that we've had a look at the pros and the cons of trading crypto with AI, is it all worth it? Well, on balance, we believe the answer is yes. If you're trading without AI at this point, you're playing short-handed. It won't turn you into a wizard, but it can improve anyone's trading decisions. If other traders are using these tools and you aren't, they're simply playing the game more efficiently than you are. That doesn't mean you can't be profitable without AI, but it means you're leaving extra efficiency on the table, and efficiency compounds the same way that bad habits do. So, what does the future hold for this promising niche? Well, agents will likely start handling more capital natively. We're talking AI software that can authorize, authenticate, and settle ever more complicated transactions on your behalf, albeit under strict permissions. In that same vein, we'll likely start seeing more agents become proper on-chain users via the DeFi AI sector. The more advanced AI agents get, the better they will be at trading and investing. It may sound a bit like science fiction, but it's really just an advancement on bots that are already executing profitable strategies on-chain as we speak. However, things may get a bit weirder. We may reach a stage where agents aren't just clicking buttons on our behalf, but negotiating, coordinating, and transacting with each other as semi-independent economic actors. That is already in the works, but we have yet to see advanced forms of it that would actually wow people. However, that day is likely coming. But none of this erases the need for risk management and discipline. The most likely future still remains trusted autonomy, where you and your agent act like a good tag team as opposed to machines taking over. You direct things, your agent does much of the legwork, and you sign off on the big swings. So, the practical move is simple. Start using these tools now. Not because FOMO demands it, but because these AI agents simply help. And as the next generation of AI tools arrive, it'll be beneficial to be well practiced in using these first iterations, because these tools are only going to get better. But you'll have to be familiar with the tech if you want to get the most out of it. All right, so what do you think? Do you plan on using AI in your crypto trading? If you already are, let us know how you're using it down in the comments. And if you want to learn about trading indicators you can use in tandem with your AI agent, you can watch our video on that right over here. As always, thank you all for watching, and I'll see you again very soon. This is Guy, over and out.